Hi guys, welcome back. So, how about a weekend edition to answer some of your questions and concerns? First question, the 20 Chinese Congress will be held in October 2022. Does that mean we'll be seeing non-stop regulation changes until then? Don't the CCP need to show good economic growth and stable markets for their re-election? I'm concerned that the CCP may have overplayed their hand in some of these regulations, and if the market nosedive, the CCP may not be able to stable the market, and this may cause real damage to the Chinese economy. I think the regulation would be continuous anyways. I don't know for how long. It could be 1 year, it could be for years. But I don't think that every regulation of the industry would be as devastating like the education sector. The education sector, I think it's something special because it is directly linked to the three biggest fundamental problems that might potentially slow down the growth of the Chinese economy. And it is number 1, the education. Number 2, real estate. And number 3, health. So these 3 sectors are the bottom lines for the CCP for the future economies for decades. This is why they would not stop or give up on regulating these 3 sectors. So in terms of non-stop regulation, I see that they would be continuing the regulations here, but at the same time, I think it is restriction, but there would be also creating other opportunities. I'm sure right now a lot of the entrepreneurs or smart money would be looking for the opportunity here created. So I think in the long run, it might not have to be damaging the Chinese economy. It might be the opposite. I think they are doing something from the fundamentals, from the roots. So something that might be painful at first, but then more smooth later on and more stabilized. And actually, I see the market is already getting more stabilized recently because the most important sectors to be regulated is education and second, real estate. So I think the most scary moment has passed already. And last week you saw the official media calling gaming the spiritual opium, and the market didn't even dive more actually. So look at the Hang Seng Index, it's getting more stabilized. For the past a week and a half, it was just consolidating within a small zone, waiting to break out. Even the news on the gaming industry did not affect much. And also, I don't think they would not care about the market at all. That's impossible to think. I think it's more like they're trying to do something. They might have a mission in their mind, like in terms of growing their own financial market, making it more detached from the US market, deleveraging while the US market is growing, making all-time high almost every day, every week, while they have the risk of tapering or other policies. So instead of being driven heavily by the US policy, I think they would like to be more independent and deleveraging. And also with the US-China war going on, it might be wise for them to deleverage at this point so the US side cannot threaten to have all the US institutions sell out of their Chinese position, and that would create a real crash. Right now, we are still seeing a stabilized correction. Take the Hang Seng Index, for example. Even though you feel like it had crashed pretty hard, it's just gone back to the level like a year ago or a few months ago. So that means it was pretty much going on the side, consolidating within this area for over a year. That's it. So it's somewhat stabilized instead of going parabolic like the S&P 500 or the Nasdaq. Because the last thing they want is for the market to grow parabolic, and one day if the US and China relationship gets worse and the politics spread too much fear and Biden threatened to sell all of the Chinese investment, that would create a real crash, and that would be much harder to recover from it because it would be a financial crisis. Versus right now, it's just consolidating, gaining momentum. Next question, what kind of evidence or milestone are you looking for to see when ARK might feel the valuation reset is over? Do you think it will be a more subjective sentiment shift in daily trades or more concrete turning points? I gave another speech about the China growth in the recent video. She sold almost all of her position in China, I think because, well, she said China would be slowing down because they want to push for manufacturing more than innovation. Well, in a way, I would think yes and no. Because yes, China wants to push more for manufacturing because right now they had realized that, first of all, the manufacturing was really the key strength, the core strength of China. It is how they rise in the last decades. And I think in the future, the manufacturing center will still stay in Asia, while I think the Chinese government has planned to integrate the supply chain, the whole manufacturing supply chain in Asia, while a lot of the labor-focused manufacturing plants would be in South Asia and the high-end manufacturing would stay in China. I think the Chinese government has an ambition to integrate the whole manufacturing supply chain in the whole Asia. And that would be a big plan coming up for them. And I don't necessarily see it as a bad thing. And number two reason was because manufacturing can create more job opportunities, and high-end manufacturing can help them solve more problems for poverty and increasing middle class. But in terms of not pushing for innovation, I'm not sure this would be true because I think the Chinese government still wants to be ahead of the game in the innovation in the new technology. They are trying very hard on pushing it. Right now, there is the Guangdong, Hong Kong, Macau, Greater Bay Area that connects all of these regions. That was originally highly developed anyways. I think they are having a very, very massive plan here for innovation. It would include a lot of the big cities, and it would be a different positioning for each of them. Like Hong Kong would be the financial center. They wanted to be the financial center of Asia and a second financial center of the world. And then Guangzhou is a city center for economy and education. Shenzhen would be the place, the biggest city for innovation, for technology. They want Shenzhen to be the fintech R&D. Shenzhen, I think it would be the next Silicon Valley. In my last video, I shared that they plan to have Shenzhen to first roll out the digital currency because Shenzhen would be the place for fintech innovation, as is the closest to Hong Kong. And for all of this innovation, there is Foshan here, which is the manufacturing center of China. So in the future, you're gonna have this area as the fastest innovation in the world because whatever you create, design, innovate here, you will get manufactured into mass production right away. So it's kind of a dreamy place for talents, engineers, and designers because the Chinese government want to have almost all kinds of innovation to roll out here first before expanding to China and other countries. So I don't think they favor manufacturing more than innovation, but more like highly integrating the two. Here, the key policies would be favoring innovation technology, financial service, transportation and logistics. I mean, if you look at their transportation and logistic plan, it is very impressive and hard to imagine how seamlessly the connection throughout the whole Guangdong province and Macau and Hong Kong. The region covering such massive population and so many economic centers. I think if you visit this area in 1 or 2 years, you're gonna see massive changes. That is very exciting. And I'm very much looking forward to that. So I think what we're seeing in the news every day and what's happening for real in China is very different in a way. And also I know people around that are launching new projects or new companies. And there are many investors eager to invest, not just Chinese investment, but also US investments. So from what I observe, the innovation environment is still going very strong in China, not at all what I see in the news. In terms of a more concrete turning point, if I have to say, I would think maybe after the National Day in October, because last time we had a big run-up towards the July 1st, the 100-year anniversary for the CCP. And right after that, it crashed because of what happened to Didi. And I guess there would be no crash before and during the July 1st event. So that's why the bad news accumulates until later, right after the event. So this time for the October 1st, the National Day celebration, I think it might be the case for investors to be afraid, because they are afraid that bad news would be awaiting after the National Day event, just like last time. So they would be more careful before the October 1st. And if after the event nothing happens, no sell news, no bad news accumulated, then they would be more bold to enter bigger positions. That's what I would anticipate at this point for a potential turning point to be right after the October National Day event. Next question, what is the best China chip company to invest? Now, you might know already that chip sector is a big sector. It includes a few different processes to make chips. There is the designing part, the manufacturing, and then also the equipment needed to manufacture that. Right now, China is facing the biggest threat in terms of chip manufacturing, and also they still cannot get the high-end equipment needed. So there is still a limit for that. But all the chip manufacturer would be banned for any kind of investment in US because they would be blacklisted. So the only way is to invest in Hong Kong or mainland. For now, the SMIC is still the biggest chip manufacturer. All hopes on them. They have a big mission to achieve higher technology to break through the barriers. In Hong Kong market, 00981. They have gone up a lot recently, but any pullback, it's a good buying opportunity. Any dip, it's good buy. The only thing that US market would offer would be something related to chip, because right now a lot of companies are designing their own chip. Like for example, Zepp and Canon, Xiaomi, what I keep talking about, they invest a lot in the chip supply chain. Many chip design companies and also WIMI making their own chip. So that would be related in the sector. Is Tuya good to buy at 19? Well, last week on Tuesday, when everything was falling super hard, it had reached the lowest of 15. And I said that it had shown the sign of bottom with huge spike of volume, and it turned to be a green bar. So it's a good sign of bottom. Biggest volume of after the IPO. It had been consolidating on the side recently, and I think the moment the small caps start to break out, I think it can grow with the sector as well. I think the next trend is definitely IoT, Internet of Things. I'm still bullish on Tuya for the company's growth, but with that said, you also need to be careful and watch out for the lockup period finishing in just a month or so, because it would be under a lot of selling pressure. So if you buy in now, make sure you set a stop loss at 17 or 17.4 would be okay. Hi Joyce, is it safe to enter Canon SOS now? Well, I did my last video about it. I think it still has room to grow. Right now, Bitcoin is at a little bit resistant here at 44,000. So if you buy in now, you can set a stop loss at the support level I have given, or wait for a little bit pullback, because they are all at the resistance level right now. So it would make sense for it to consolidate or pull back a little bit before breaking through the resistance. For SOS, support is at 2.7. Do you see Russell 2000 making new high soon? Last week, I have given my opinion on Russell 2000. I said it had been trying to break through this upper range of resistance at 233, 1, 2, 3 times. And I think the next time it would break it and make an all-time high. For now, it's just consolidating between 218 to 223. And the FANG had consolidated 10 months before breaking out. So we do need to give a little bit patience. And I said good thing is a lot of recovery stocks, cruise line and airline had make a double bottom, so it would help push up the Russell 2000. I've been seeing the recovery stocks making double bottom for a few days, and you can see it from American Airlines making a double bottom, and on Thursday almost confirming the reversal. Question about BTBT, it had grown a lot, yes, but it's also very volatile. After it had grown so much, it's quite hard to enter unless you did before. So it's very hard to set a stop loss in this case, because the next support is around 13 and then 11, so that would be like 30% of stop loss. Doesn't make sense. I think it would be a lot of risk taking here. Baker just hit 52-week low. Good entry or wait? This looks pretty bad, but it is also a little bit similar with the education sector, what the government must regulate. So I would think it's better to wait because there would be many other sectors that the government encourage, so we can invest with more confidence and at the same time beaten down as well. And also ARK Invest was bullish on Baker 1 year ago. They kept buying after the IPO, accumulating I think between 40 to 60, and then they recently also sold out of their position, I think. I hope you're having a successful week in the market. Thank you. I would like to know your opinion is on PDD. What are the pros and cons? Approaching the mid-80s prices seem like a good opportunity to build out a position. So on July 27, I had called out the golden dip on PDD. It went down very fast, volume increase, reaching 78, major support from 2020 before the big run-up. So I think it would be a good value for the company. In the long run, the company is still at loss. They have not proven the business model, but they did expand very quickly because they have a very good management team and big investor backing them, like some famous investors in China and also Tencent when it was competing with Alibaba. But also you have to know that rumors said that Alibaba and Tencent would open their platform to each other. So it is slightly less advantage for PDD. But with that said, it had a very unique strategy since the beginning and caught on a very good timing to build the development of third and fourth tier city of China. And it also happens to be what the government really want to push for. So they have advantage in terms of policies favor. Again, I think ARK Invest had almost or entirely sold their position on PDD with a big loss. So something to keep in mind. Last question. Hi Joyce, this is my first question here. Welcome. Maybe you told about it. What do you think about Cathy's dumping more Chinese stocks recently? Yeah, I kind of addressed that before, but I can add more to that. Out of all the ETF, I think what they sold the most and what they were the heaviest in China investment before was the ARK-F, which is the ARK FinTech Innovation ETF. They had the most Chinese stocks in this ETF before because she was very bullish on the fintech, as 95% of mobile payments were within China, mainly driven by Alipay and WeChat Pay. So they believed that China would be leading the fintech innovation. But the reason why they sold out of their position, I think it's because of blockchain and Bitcoin, because China is banning Bitcoin and pushing for their own digital currency. So I think she would be afraid or worried that it would slow down the growth of Alipay and WeChat Pay. The fact that Chinese government is pushing for digital yuan would be hurting the market share for Alipay and WeChat Pay. So there's no real answer for that right now at this point. I have been digging into this myself, and we need to know more about the digital yuan's plan to know whether it's a good or bad thing for Alibaba and Tencent. Okay, I hope I covered all the questions. If not, leave me a question again on Discord or leave me a comment down below. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.